So, good afternoon, everybody. I want to say thank you guys for joining today. We are going to cover a topic that I would say is probably my least favorite topic, but it is out there and some people need it. So, we are going to talk about it. There's, again, no bad products, just bad agents. So we'll go through this from a presentation standpoint, kind of explaining some of the different things that are out there from a product standpoint. Also understanding the market and just what's available. But the big thing too that I want to mention is we are going to do our great collaboration event come May 3rd and 4th. It's going to be in Dallas. It's going to be really cool. We are actually focusing on a lot of different stuff. So to go along the line with collaboration, um, if I showed you my whiteboard right now, there's a lot of cool things that we're going to talk about and build off of. And this year it'll be like a round robin, so we'll have different start times for different things. Like I would go to these concerts, and you have concerts start at different times, so people can, go to different events, pop into some, pop out, whatever. But we're gonna have a lot of different carriers, a lot of different sales ideas, a lot of different partnerships. Because again, the idea of what we're going to be doing is collaborating. So we'll have different ideas, different opportunities to collaborate with and help you grow your practice. So more to come on this. Looks like we're probably going to charge like 25 bucks. And so the reason why we do that is we're actually providing food. So we're going to give food on lunch on the Saturday and breakfast on Sunday. So you got at least some sustenance, so to speak. But a lot different than some other places with their quote unquote conventions and things like that. It's going to be at the Westin in Irving, Texas, and they greatly reduced the rates for the Westin. Normally it's about 230. We get it for about 170 a night. And the other reason why we're putting 25 bucks on it is it's limited seating. So there's about, 400 seats available. And so we want to make sure that those who are really committing will actually commit. So limited seating, and then we'll have to cut it off. But this will be great. Last year we had about 250 people. This year I anticipate about 400 ish. So I would say we are going to have a landing page up soon where you can register and everything. So more to come on that, but you can see a little snippet here of a coming soon. TGCconference.com is the website. So just wanted to kind of give you that little snippet and look forward to seeing you guys there. But today, what we're going to talk about is, as I already mentioned, not my favorite topic. From the standpoint of, I think final expense is the most misunderstood product in the industry. Reason being is there's a lot of agents who are looking for the easy way out, and they're looking for a quick and dirty a way to get a commission and move on to the next case. You'll see why you can, sell these pretty quickly, but on the flip side is that there's a little bit of, a little bit of I guess you'd say silver lining for these type of products. So again, like I said, we'll go through this. I'll give you some examples of kind of how this works. But yeah, we'll talk about final expense and whole life for seniors because um, what we want to do is always empower you guys as agents, have a good understanding of final expense. And again, not everyone has a good understanding to these type of products and portfolio. So when you think about what they're offering or the way they position it might not be from the best intentions, so to speak. There are a lot of multi-level marketing groups that focus solely on final expense and leads and all this other stuff, and it can really hurt someone more than help someone, in my personal opinion. So we want to make sure that we truly truly understand the product, where it can be used, understand the market with the opportunity. I have a few carriers that we have that you can do, this type of solution with. That we'll give an example, and I'll show you like a rate sheet because it's different than running a quote. So we'll give you the tools and strategies to help you with that. So, what is final expense? Final expense is a specialized form of whole life insurance. Okay, it is on a whole life chassis, designed to provide financial support for end of life expenses. So, a lot of people think about a funeral expense, funny anecdotal thing. You could actually pay and buy a casket on Amazon. You can go to walmart.com and buy a casket. They're usually around 10 to $12,000 for a good one, I guess. But you look at final expenses is really what it means. Funeral costs, medical bills. Maybe some people just can't, afford to, buy it all up front. There's other things called pre-need where you can prepay it, but there are people who might just want to do this route with a monthly or an annual premium. When we talk about final expense, some of the major features or key features about it really is the simplified underwriting process. Okay. And there's two forms of underwriting for this. There's either guaranteed issue or simplified issue. And it just really depends on if there's any ailments or issues with the client. So, what it does is when you talk simplified underwriting, as I mentioned before, a lot of multi-level marketing groups will focus on this avenue because you get in the door, you get out the door, and then people can say, amazing success. But I say, success is relative. If you want to stay in the industry long, you got to make sure you're taking care of the client and not just a quick and dirty sale. It is designed for seniors in mind. There are other carriers now that are going down to like 20s and 30s. Once again, me going back to my fear of, even having this discussion, because when you think about people who are younger, we hope to get them insurance before it comes to the point where this is their only option. It is guaranteed coverage, so as long as the premiums are paid, you'll have that amount. Say typical range is 5 to 50 grand. You're not going to usually see higher than that because of the simplified underwriting approach. So if you have carriers who have a small application with a bunch of knockout questions, or one that just says you're issued, they can't be on the hook or liable for large policies. Otherwise, it could be very damaging for the insurance company and could lead to some major concerns. And why is final expense growing? It's a very easy response. We have an aging population. They have that gray wave moving in. And, with that, you have to seek some type of opportunity. We've done trainings in the past about like life insurance retirement plans, people talking about retirement. Well, the average client right now in their 50s and 60s has about 30 to $50,000 in their 401ks. So if they can barely make it for retirement with what they have planned, are they really thinking about, funeral costs and end of life preparation? Probably not. So as we have more and more individuals heading into this older age range, we have to have them get prepared to think about, your basic expenses. As you see in the bottom left, some have that fixed income. So large life insurance policies at an older age might become unaffordable. Whereas final expense, you do have a budget-friendly option, and that's usually between, again, simplified issue versus guaranteed issue. Um, so we look at statistics by 2030, 1 in 5 Americans are going to be over 65. Folks, when we think about this, when we think about that aging population, another conversation around this would probably be long-term care, probably be the utilization of some form of insurance policy with a long-term care rider or chronic illness rider. But again, a lot of people don't think that far in advance. And then by age 65, if they have a limited budget, and they have, basically not too much to work with, you have the situation here where the funeral expenses at least covered is an important thing. So as you can see on the right, 70% of seniors do have a concern about funeral expenses. It's a big number. So we look at features and benefits of final expense. So there's no medical exam. It's quick and easy, and very minimal when it comes to health questions. So as I mentioned before, simplified or guaranteed. That is a big point of contention for me is a lot of people will go the guaranteed route because it's quicker. But the simplified would be more advantageous if you have a healthy client. I'll throw it out there for anyone who wants to answer. Can anyone tell me the major differences between simplified versus guaranteed issue?
It's going to be based on your health. Like certain, if you have certain illnesses, then it could end up making you go over to the guaranteed issue. Whereas if you have somebody that they may have some health issues, but they could go simplified and it does end up reducing the cost.
Dramatically. So
Hmm.
yeah, you're absolutely right with that, Nicole. It's like if you think about simplified. Good. Oh, sorry. If you think about simplified, think of it like a funnel. Okay. So your application is kind of like a funnel. You start out with, has the client had cancer in the last 10 years? Yes or no? Has the client had a heart attack in the last 10 years? Yes or no? Has the client had actually 5 years? They start out 5 years. I would guess it's a reverse funnel. So last 5 years, and then you have a second part of the application where it's like, have they had it in the last 15 years? Have they had a heart attack in the last 15 years? And they broaden it out. So with simplified issue with say like Mutual of Omaha, if you pass the first part of the application, you will qualify at least for guaranteed issue. If you pass the second part of the application, you will qualify for simplified issue. Simplified issue greatly reduces your premium versus guaranteed issue and allows you to have the policy day one. That's the big thing about simplified versus guaranteed. So if I did a guaranteed issue policy today, and I died a year from now, I would not get that death benefit. My beneficiaries would get my premium back plus a nominal interest rate, say like 5%. So what it does is it prevents the insurance company from taking someone who buys a policy today and dies tomorrow and only paid for one premium, right? So guaranteed issue, they also call it a graded death benefit because you're only going to get your premiums back in the first 2 years. After your first 2 years, you finally hit past that contested period or whatever, and now all of a sudden you have a fully, underwritten death benefit, so to speak. Simplified issue, you get a day one. So it's going to be cheaper and you get a day one versus guaranteed issue where it's more expensive and you have to wait 2 years. And by the way, you as the producer, when you sell a guaranteed issue, that chargeback is a 2 year provision as well. So if the client dies in 2 years or less, because the company is giving the money back, it's almost like the policy was never there. Therefore, you will have a chargeback. So, very risky, in my opinion. That's why what you'll see with a lot of final expense is a model where, let's say I'm brand new to the industry and I join this company that focuses on final expense. Maybe it's a call center. Well, maybe they get their leads from some organization of like they run ads, people express interest, they come to you and they say, hey, Phil, I want to get $25,000 of coverage. I say, okay, so I'm paying for the leads and then I go and I write cases, but it doesn't always happen that way. I'll pay for, say, a bundle of leads, And then I might be competing against the other people who are on this call today to get to that person first. Has anyone ever tried using Lending Tree for, interest rates on mortgages? And then you get calls for the next 2 weeks from people asking if you still need help with a mortgage. So it's kind of like the same thing with leads. You express that maybe you want some type of trinket or trash, like they send you a mug, and then all of a sudden you have 30 people calling you to see if they're the first persons to give you coverage on insurance. So, so that's the kind of stuff that you'll find when a lot of these final expense companies will have leads. They give them to people, people pay money for these leads, maybe half of them work. And then now all of a sudden you have 2 year window where if they lapse, you're going to have a chargeback, but yet you're still buying leads to buy new opportunities. And you run into this issue where you're paying money over here for your lifeline and you're trying to keep the policies in force over here for some people who may not be able to pay or afford it. So it's a big rat race, but I need to just kind of express that concern. What a lot of people have with final expense is they think it's like this golden ticket that someone's going to buy a policy and then they're going to get paid and be happy. But most of the time, if people can't afford certain other coverages and they think that final expense or $5,000 is great, but then the new iPhone comes out and they want to buy that instead, now all of a sudden you got a problem. So that's why I say like kind of use this as caution. Um, it is permanent coverage. It is on a whole life chassis. Whole life is typically more expensive. It's not a whole life with dividends. It's a basically a non-participating whole life. So you're paying for all the expenses, but not getting some of the benefits of dividends. And it is a fixed rate, so it's not going to change. You could say budget friendly. Depends again on simplified versus guaranteed. But the payouts, death benefit pays out within 24 to 48 hours, once again, pending on the carrier. So, any questions on final expense? We're going to talk about whole life insurance for seniors here, but this was the first half of the presentation. So, I want to see if anyone had any quick questions on this. No. Okay. So, diving in now to the whole life insurance for seniors. Again, whole life insurance for seniors, it is that permanent coverage with a fixed death benefit and premiums that remain constant throughout. I guess there is a T here, but that white lettering. Anyway, something I gotta fix. So the idea is that you're offering protection for the rest of someone's life. You have cash value if you need it. And this goes against the question that we always have. Should I buy term insurance? Should I buy permanent insurance? Well, I always say to a client, well, if you tell me the exact day you're gonna die, I'll give you the right protection that you need you know so some people will pick the cost conscious term, but then you have that other concern on the other side of the fence of retirement being when we look at seniors, some major concerns is you're closer to expected mortality, and on top of that you also have things like long-term care to worry about as well. So things like this are very important. It's our job to really get to them before they get to the point of being a little too expensive, but sometimes it's take it or leave it kind of thing. So we look at some of the key features here. Permanent coverage, so it does give you coverage for the rest of your life. Guaranteed death benefit, that is a big thing. This is going to be guaranteed death benefit day one because you're going to go through some form of underwriting. So this would be typically with traditional whole life, you can go down to $20,000. They usually don't go down lower than that, but you can go up to, the sky is the limit. So there is a difference there from the standpoint of when you talk about underwritten insurance versus simplified or guaranteed. This one does have cash value growth, and typically, if you buy a whole life product with dividends, which would be your major carriers, like we work with Lafayette, we work with New York Life, we work with a couple others, but those are dividend paying whole life products. And so that's where you have the cash growth, but then on top of that, you also have the dividends coming back in the form of cash accumulation as well. But it is fixed premiums, it's guaranteed for life. If you think about this is what you call a top shelf policy. You don't have to think about it. It's just going to do what it does, and you know it's guaranteed as long as you pay the premium. It is lifelong coverage, as we said, cash value growth, some of the advantages there. People like the guarantees. So, and there is no age limit for this type of application. So, when I say that, it's kind of tongue in cheek, but we do have carriers that can go all the way up to age 90 in the permanent insurance space. Is it cost advantageous? Probably not as much as if you'd had a 30-year-old apply for permanent coverage. However, we do have carriers that can go all the way up to age 90. So, key considerations, selling these whole life products. Again, you could marry the conversation. I'm using the word whole life as dividend paying whole life because, again, we're correlating the difference between guaranteed issue, which is a whole life product, and traditional whole life. But you can marry the phraseology of permanent insurance to any of these conversations. So, premium affordability, depending on what your idea of premium tolerance is. Health considerations, there is always going to be that concern. So if I had a client who was, let's say, 65 and they had a heart attack last week, well, this is completely out of the mix. But guaranteed issue is right up the alley. Need for cash value, so that's always important to prioritize a death benefit versus cash value. Once again, going back to what we talked about with IULs, a lot of carriers have a protection product and a accumulation product, so it just depends on which one. So some of the carriers that we look at from a senior life insurance, Gerber is one of them. So I don't have a rate sheet handy for Gerber, but the interesting thing about them is that they actually have an app. So it's a free app. You can go on your app store, and all I'm going to do is put up uh, guaranteed life. Yeah, guaranteed life. And then I can run a quote here on let's say a 50-year-old male, and then it's going to give me a rate chart. So the beauty of it is, you have final expense with them, whole life tailored policy. They range from $5,000 to 25,000. Sorry, that is them. 5,000 to 25,000. Optional riders, you can get accelerated death benefit for terminal illness. Most carriers have ABRs that include terminal illness. Not a lot of them include the chronic and critical. But yeah, it's about 5,000 to 25. Typical age range for Gerber is I think 50 to 85, somewhere in that range. Another contender, so if anyone says, Phil, do you have final expense? I'm like, yeah, it's either Gerber or AIG or now Corebridge, from the standpoint of this guaranteed issue policies. So with Corebridge or AIG, same thing, 50 to 80, 5,000 to 25, consistent level premiums, accumulates cash value over time. And to give you an idea, again, these are products that you usually either have an app for, like I showed you with Gerber, or you'll get these rate sheets. And so these rate sheets will basically say, all right, I am a 65-year-old male. $5,000, that's going to cost me 46.42 a month. $25,000, that is going to cost me 199.48. All right. So if we look at, say, a 65-year-old paying, let's just say $200 a month, that's $2,400 a year. Or sorry, no, 248.84 for $25,000 worth of coverage. So every year you're paying $22,488.40. So when you think about that, 25,000 divided by 2,488 and 40 cents means you roughly have a 10-year horizon for this policy to make sense. Okay. So that's why when you look at guaranteed issue, especially guaranteed issue for younger ages, you are paying a grossly higher premium than you would pay for this versus, say, for example's sake, a traditional policy. These policies are really, really not designed from the standpoint of having a customer who's healthy get this type of product because we have several carriers that can offer a better value proposition. For example's sake, Mutual of Omaha. Mutual of Omaha has a simplified issue product, and they go from 45 to 85 for those similar benefit timeframes, and it's a fixed premium. So if I were to show you here again, let's say a 65-year-old wants 25,000 and they're a male. Well, the cool thing about Mutual of Omaha, much like Gerber, is there's an app for that. Okay, so if I were to look for what they call their living promise, and I run a quote, let's say for example's sake, the same thing, we have a 65-year-old male, a level benefit so they can qualify for insurance, not graded, which is your guaranteed issue, no smoking, and we're going to do $25,000. The total cost for this 65-year-old 136. So roughly half of what you're paying, or not, I say roughly half, yeah. So about 110 bucks less than what you're paying for this guaranteed issue policy. And that's those knockout questions we talked about before. You start out, have you had cancer in the last 5 years? Have you had a heart attack in the last five? Have you had cancer in the last 10? Have you had a heart attack in the last 10? And then they figure out, will you qualify for the simplified issue versus guaranteed issue? So a lot of these smaller sales you can get done quicker because of the fact that it's more transactional. And so you look at a case study. I pretty much already did that. So I'm not going to do it again. 70-year-old female. As you see, it was on the rate sheet. So you can see here on the female side, 70 years old, and you'll see 220 for a $25,000 policy. So men, the typical crossover is about 10 years. Women, it's usually about 12 years because you guys live longer than men. So it's all up to, the actuarial equations. So when we look at final expense, again, I don't want anyone to get caught in the trap of really using final expense as a I'm going to sell this to everybody thing because it's really not for everybody. If you're looking to add value, provide the right coverage for the right person, our first step should always be either traditional type underwriting with actual underwriting or simplified issue depending on the age. I'm sure I could take, this 65-year-old male at 250 and probably with, an IUL or, a decent whole life product that's not guaranteed issue, could probably get them $50,000 worth of coverage versus 25. So that's the other thing to just kind of think of. So in the tiers or structure, I like to say start out with traditional underwriting products. There are some that are non-med, right? I'm not saying just always go for lab work. Then you have simplified, then worst case scenario, you have guaranteed issue. So that would usually be the tiers in which I would kind of follow in the process. Whole life insurance, again, using the phraseology tongue in cheek, because you could say permanent insurance here, but the words guaranteed death benefit. There's very few carriers on the IUL side that have a guarantee. There are some, and then you have your traditional whole life that give you the guarantees as well. So just kind of when you think about the formatting and time frame of when you would use these certain products, you just want to kind of put it all together. Now, from my standpoint, being where I'm at, my goal and objective is to help elevate and improve everybody where they can be and where they need to be. So, over the last few weeks, we talked about things like term insurance. We've talked about, traditional whole life. We talked about some IULs and ULs and things like that, and the guaranteed issue. You don't have to speak if you don't want to. Thumbs up, if you want. But my next objective is to take, some of this information that we have here, and then turn it into an opportunity where we'll create a playbook. So, playbook being, hey, I've got a senior citizen who has some ailments or issues. Go here, look for this. I've got a client who wants $150 to put into a policy. We should look at term, or if they want some type of permanent policy, burial policy, whatever, we can look at that as well. So, would that interest you guys? Do you think that you'd find a value if we created some type of playbook that was available for you guys as agents to kind of give you some roadmap or guidance on when to seek what type of carriers and what type of opportunities?
Yes, it
Okay.
would feel.
And this is coming from a tenured vet. She's got 100 years of experience in a 20-year-old body. So thank you, Laverne, for speaking up. But you know, it's one of those things where we're gonna continue to drive for perfection or as close as we can get here, and we're going to try and find different ways to help you guys make it easier to sell. It's a big industry. There's a lot of things out there, but when it really boils down to it, the one thing that you'll always need to understand is you have to figure out there's not one perfect methodology for any client. 18 years of doing this, 18 different solutions and 18 different years worth of options and ideas. So we'll kind of keep cooking in different ideas, strategies, and everything like that. But on the same token it is a roadmap to help you get to where you need to be. So we'll continue looking at avenues and ways to help enhance the practice from that standpoint. But really, like you see here, identify your client specific needs, whether funeral expense coverage, legacy, cash value, all of those would dictate the next part of the roadmap in which you would then move forward with to help your client. So, again, not too much. Normally I go for like an hour, but there's really not too much when it comes to guaranteed issue. Very easy process. What I'll share with you too, again, is when you want to submit the business, for example's sake, if I wanted to submit the business on the simplified issue approach, you want to log into the back office where you submit the business. And then if you go to tools and resources, sorry, forms and IGO, launch forms and IGO eApp, log in, start new case, and we'll just say Alabama for funsies. And then you'll see here you have a ton of different options. Okay. So final expense, got Transamerica there. Okay. So that's one company. You'll have, let's see, where's the other one? Might be under whole life. So Surety has their single pay. Corebridge, their simplified issue is here. Foresters, they have their non-medical process as well. Transamerica again. But here's the Mutual of Omaha one, the Living Promise Whole Life, or the Living Promise product. That's the one you'll want to use for your simplified issue. Um, in regards to Gerber, you will want to do that through the Gerber portal. So you'll have to actually log into the Gerber site and submit the business from there. Simplified issue is available here. So I'm assuming that would also be for their guaranteed issue. But all of those are available at your fingertips. And again, put a bow on this. Again, if you guys are planning on coming to the Great Collab, It'll be about $25 for registration because seating is limited. We'll have lunch for people on the 3rd, breakfast for people on the 4th. It's a day and a half for this meeting, and sales ideas, technology that you can use at your fingertips, different types of collaboration opportunities. I'm even trying to get my dad out there. Some people may why. Well, my dad is he works with a reverse mortgage company, and if you use reverse mortgages the appropriate way versus the stigma and how they're typically used, you can actually use it as another asset class in retirement. So, different ways to find money, different ways to support our customers and clients, and really focusing on building out that network of collaboration. So, we'll have a landing page soon for people who want to register early. But just really excited for the opportunity to support you guys. We'll open it up for any questions that you guys have, whether it is either on this, final expense and all that stuff, or if it is on anything else. I'm more than willing to take any questions, and leave this up for you guys. If you haven't been to Valor Financial Specialist website, my email address, and this telephone number. This is my marketing phone number. So if you have a different cell number for me, don't change it, as long as it's an 860 number. But if this is our first time talking, you'll probably get funneled through that. So, any questions? Does anyone have anything? Going once, going twice. All right. Well, I appreciate the time, guys. You have a great weekend. Enjoy the time with family this weekend, and you'll probably see me in your neck of the woods at some point sooner than later. I think everyone on this call I'll probably see in the near future. But you guys have a great one. Thank you as always, and let me know how I can help. All right. Take care.
Thank you, Phil.
See you
Thank
guys.
you. Bye.